Hello traders and welcome to the market update for the week ending 15th of January 2021. I'm JG, member of the Vedanta Elite Trading Team here at Master the Markets. And this is my first market update this year. So with that, I wish you all a very happy new year and look forward to joining you on your trading journey for this coming year. Today, what we're going to talk about on the market update is the 4 basic market principles all master market strategies are based on. So when we're looking at when we're creating our strategies and when we're looking at like new options or how we're going to adjust it if we need to, then these are the 4 things that we look at and we make sure that these are applied within strategy parameters. Okay, so the first one, the market is not linear but cyclic. So let me just correct that because it doesn't say the market, does it? It says I wanted to put the market. Okay, so the market is not linear but cyclic. Okay, what do I mean by that? Well, as you can see, the market is not a straight line. If it was a straight line, there'd be nothing to place trades on. We wouldn't know whether the market is going in an upward or downward direction. And if you don't know what direction the market's going in, then it's difficult for us to place a trade on there. So the market is not linear. It doesn't go in a straight line. It moves in cycles, okay? Cycles being something that we'd see on charts, okay? How does that look like? What does that look like on the chart itself? Well, as you can see, Master Markets have this amazing tool called Smart Money Indicator, which is what you see here with the arrows and the dots. So the arrows are confirming the swing point or the top, and then the dot confirms, is a confirmation bar to say this is confirming that this is a swing now. But going into that, if you can look at it, then if you look at the chart itself, as you can see, it goes up, down, and back up again, and then back down and up. And so as you can see, this is what I mean by it's cyclic. The market doesn't move in a straight line, okay? It moves in a cyclic formation, all right? Okay? Also, cycles have turning points, okay? So what do I mean by that? Cycles have turning points means it has something which is known as a swing high and something known as a swing low. So as I said here, the market's gone from this point here, which has been confirmed as a swing high, and our clever indicator here tells us that's a swing high, and then where this arrow is formed here becomes the swing low. Okay, so there you go. We have a swing high followed by a swing low, followed by another swing high, followed by another swing low, and so forth. The market goes on, okay, forming turning points. So it turns and then goes in the other direction. Then it turns again, goes into the opposite direction, then turns, and so forth. So that makes it, the cyclic, and it tells us where the turning points are. Okay, now the turning points themselves are broken down into phases. Okay, so we'd class this as a phase, and this will be another phase from the top to the bottom to the top, and then from the top to the bottom again will be another phase, and from the bottom to the top again another phase, and so forth. Now we have it in here that the markets are not linear, they're cyclic. Cycles have turning points. So we've established that. There's a smart money indicator showing us where the turning points are. The turning points are broken down into phases. So there you are. You have a phase there, then you've got another phase there and another phase there. So basically when I say the phases, it tells you, this is a top forming, this is a bottom forming, this is a top, this is a bottom, and so forth. And then the final point on market principles is open equity. What do we mean by open equity? Okay, so as it says here, the point of entry to the maximum point reached. So, for example, if I was to say that I'm going to enter the market at this point here, where this arrow is, Okay, for example, I want to enter on that point there, and then where does the market get to the maximum point? So when you look at it, you can see that it goes to the top side there, and it reaches a high point there. So that's the maximum point reach. So the distance between this point and this point is what we class as open equity. Okay, and we know that that's how far the market has traveled. Okay, and what we would do is we would do a calculation and work out from all the previous moves from there to there, there to there, there to there, and we'll take all these moves and then work out on average how far the market is moving with that instrument. Okay, so then we know that on average, for example, we could say that on average, on the euro dollar, the market moves 600 pips in each phase. Okay, all right. And if that's the case, then that tells us that next time when we have a turning point forming in the market, then we are expecting it to move on average 600 pips. So if it has moved, say 450 pips already, if it moves 450 pips, then that does not become a good viable trade. But if it's only moved 100 pips, then we still have another 500 pips to go, and that would make it a viable trade because we want to capture the maximum open equity of the trade. Okay, so there you have it, the 4 basic market principles. To summarize, the market is not linear but cyclic, so it doesn't move in a straight line, it moves in cycles. Okay, the cycles have turning points, which are classed as swing highs and swing lows, and the master of the market's smart money indicator tells you exactly where the swing highs are forming and the swing lows are forming, okay, with the use of these arrows on the charts. Okay, the turning points are broken down into phases. So there you have different phases. You have a down phase and then an up phase, different phases within the turning points. And then the final one is the open equity, which is the point of entry to the maximum point reach. So from the point of entry to the maximum point reach, we quantify how much of a move each cycle is making. And then once we've confirmed what each cycle makes, then we can work out if there's viable trades to be taken on this instrument itself. Okay, the 4 basic market principles. There you have them. Okay, moving on to the market update itself to see how the markets are forming for us this week. So starting off with the euro dollar. On the euro dollar, there's a strong move to the downside. We have taken trades on euro dollar this week already. Some of you may have been in them with us on the cash in. We would have entered here on the close of the confirmation bar, and then taken the trade to the downside, obviously being stopped out when the market reversed because we would have trailed our stop loss and got out of the market there. But as you can see, it still has a pretty strong move going to the downside on the euro dollar for now. Dollar Swiss, a little bit of a slow week. It hasn't really shown any signs of a direction for us on there. Even the market's in an uptrend, but the chart itself this week hasn't shown us much for that. Pound dollar, slightly unsure where it wants to go with this one on the market. As you can see, we have a confirmation dots all over the place, but the market is moving to the downside as it speaks for today. As a whole, the trend is to the upside, and we have short trades pending on this market. So let's see how it falls out in the coming week. Dollar JPY on the dollar yen. Again, no strong move to show us which way it wants to go, but there's a possible swing high forming shortly, and then the market will be going to the downside, and we will take opportunities where they arise. Aussie dollar, same again. We have pending orders on the Aussie dollar, because we're looking for a move to the downside, and it seems to be forming as we speak for today. But these are the trades that we'll be looking into for next week to confirm that we can get in on them. Euro JPY, a very strong move to the downside on the Euro JPY. It's a good solid move, and it's still looking like it's moving further to the downside after a little bit of consolidation late last year. We've got a good move. Okay, something that we are going to be entertaining shortly. FTSE was a little bit choppy, and the market had a strong move to the upside last week. And it was mentioned on the market update last week that there could be a possible move to the downside. And as you can see, it is a good move coming to the downside as we speak this week. So that was well caught in last week's market update, as was the Dow Jones as well. Slight consolidation going on, and no major moves, but we are looking at a possible move to the downside when it happens. That is something that we want to keep a close eye on for the Dow Jones. Coffee, again, strong move on the coffee to the upside. We did have a trade on the coffee, and obviously it was on a one-day exit, which means we would have entered on the close of the confirmation bar. Our entry would have been on the close there. Our stop loss would have been at the low of the confirmation bar. But being a one-day exit, remembering the one-day exit trade strategy that we have on the cash-in. One-day exit trade. What we do is what it says on the tin. Basically, exit the next day. So confirmation bar entry, and we would have exited the trade on the close of this bar there and taken us out of the trade. And as you can see, it still had a strong move to the upside and has rallied back down today. So, a trade that worked in our favor this week. Looking at the oil. Oil has a strong move to the upside. It has been since last year. Slight reversal there. Something we'll keep an eye on, because if we get a swing high, we have a swing low confirmed here. Once we get the swing high confirmed, then there'll be a trade for us to take on the cash-in strategy with the oil. So we are looking for a move to the downside. Silver, big bar on the silver. Most of the open equity has been taken up, so we'll be waiting for a swing low to occur, and then see if there's any other opportunities forming for us. But it's actually in a downtrend, but we're looking to take a long trade next. Bitcoin, it has had a very strong move from last year. We've already mentioned this, and from the end of last year to the beginning of this year, as you can see, at its highest point, it's reached 41,968. So that's almost 42,000 on the Bitcoin strategy, which is the highest it's been as far as I know. But a little bit of uncertainty in the market this week. In the past 5 days, as you can see, we've had a couple of seller bars as well as buyer bars. So a little bit of uncertainty in the market as it stands. But it was mentioned in last week's market update that there was possibly a move to the downside forming. And then on the Friday bar there, it was mentioned on the Friday's market update. And had you taken a trade to the downside, then you would have gapped in on this trade. But that was well predicted last week and well caught for those that you did take the trade. Well, that's the market update for this week. Moving on to our journal now, and the performance for our two rooms. So we have the LTR and we have the elite room. Okay, so what we're going to do is break it down to say what we've done this week on both rooms. So first of all, we got the prior runners. On the prior runner strategy for the LTR, we had a figure of a total of minus 0.15. On the lift off 20%, we had a figure of minus 0.43. On the lift off 70%, we had a figure of 0.04 and a plus figure. The cash in on the LTR TSL Pry, because we have two cash in strategies, as we know. So the TSL Pry was a minus 3, and the cash in 1 day was a minus 0.21. So in total, that gave us a minus 3.75 figure for the LTR room this week. We still have a few orders that are still running on the LTR, so it's not completely finished. We have some orders still running, but as it stands at the end of the week for Friday, for today, we have a minus 3.75 figure on there. And on the elite room, we had on the primary runners 20%. We had a minus 0.14 figure. On the primary runner 70%, we had a minus, correction, no, it wasn't a minus figure. We had a figure of 0.30. On the cash in, 20%, we had a minus 0.81, and on the cash in 70%, we had a 1.95 and the plus figure. Okay. There was nothing on the continuation pattern strategy, so that gave a figure of 1.30 in the green. But however, as a total, what we have in there is a total figure is minus 2.45 this week. Okay, a minus 2.45 figure for both trading rooms for us this week. However, we do have some strong trades running still in the market, and they're live. So until they close, then we can see exactly how we've fared on the trades that we have taken this week moving forward. And that concludes our market update for the 15th of January 2021. So with that, I'll say until the next time, stay disciplined, follow the plan, and keep trading like a master.